Namaste and warm greetings. Welcome to the Sola Ane Daily Brief. Today is Thursday, April 23rd, 2026. Indian markets are caught in a tug of war. The global oil scare is back, but our factories just posted their strongest reading in months. Let's unpack it. First up, today's headlines. Sensex crashed 852 points to close at 77,664. The second straight day of selling as Strait of Hormuz tensions keep buyers on the sidelines. Nifty slipped below 24,200, and the PSU Bank Index lost 2.19%. Brent crude breached $100 a barrel, 103 to be exact. India's crude import basket has now climbed to roughly $125 per barrel, the most we've paid in 2 decades. Infosys beat the street with a 21% jump in Q4 profit to 8,501 crore rupees. But the FY27 revenue guidance was cautious at 1.5 to 3.5%, and the deal win total dropped sharply to $3.2 billion. Now, let's dig into the one story that's touching almost every business today. Oil. Brent is at $103. Indian basket, 103. And because we're buying alternative cargoes that bypass Hormuz, our effective April import price is $125, the highest we've paid in 20 years. 15 India-flagged ships are still stranded in the Persian Gulf. 90% of our LPG normally comes through that strait, so supply is tight. Booking cycles have stretched to 25 to 45 days. The government stepped in today and denied reports of a 25 to 28 rupee per liter petrol and diesel hike after state elections. For MSMEs, the playbook is clear. If you run a restaurant, a dhaba, a small bakery, cooking gas lead times are your problem. Over 4.75 lakh new piped gas connections have been registered since March. Where PNG is available, switch this quarter. It's the single biggest input cost hedge you can put in place. For transport, logistics, and cold chain operators, build a 30-day fuel buffer into your new quotes. The government won't let pump prices move before elections, but your freight contracts won't be so forgiving if global crude stays above $100. Moving on to the other big story, Infosys. Q4 profit climbed 21% year-on-year to 8,501 crore rupees. Revenue grew 13.4% to 46,402 crore rupees. Both beat analyst estimates. A 25 rupee final dividend was announced, but 2 signals worth watching. Total contract value dropped to $3.2 billion this quarter, down from $4.8 billion last quarter. And FY27 revenue growth guidance is a cautious 1.5 to 3.5% in constant currency. Infosys is a proxy for global IT spending. When deal wins soften and guidance tightens, it ripples out. Bangalore cafeteria vendors, Pune transport fleets, Hyderabad housing rentals, Chennai interior fit-out shops, they all feel it within a quarter or two. If you sell to IT staff or into IT campuses, watch hiring announcements over the next 60 days, not the dividend cheer. So, what does today's news stack mean if you're running a business? 1. Factory activity is actually accelerating. HSBC flash PMI jumped to 55.9 in April from 53.9 in March. The Composite index hit 58.3. If you sell into manufacturing, demand is still there. 2. Fuel and gas are your biggest input risk this quarter. Lock PNG early where you can, and price a fuel buffer into new quotes. 3. For services and IT-adjacent businesses, budget for softer tech spending through FY27. 4. On the capital markets, 2 long-awaited events moved closer today. NSE cleared a 1,800 crore SEBI settlement, opening the door to its long-delayed IPO. Godrej Industries jumped 10% on a 7,000 crore investment plan into its unlisted arms, targeting 5 lakh crore market cap by 2031. That's your Sola Ane daily brief for today. If you're thinking about buying or selling a business, head over to solaane.com. That's 16ane.com, where we make business deals sola ane paka. See you tomorrow.